What's up, guys? My name is Tai Zen. Welcome to the cryptocurrency.market channel. This is a trading, investing, and entrepreneurship channel. In this video, I want to talk about what is staking in regards to making a profit from it and investing into a staking coin. I will not go into details about the technical aspects of staking compared to like proof of work. Okay, I'm just going to outline it real quick, and then I want to focus on the money-making aspects of it, because you guys know that if you're following our channel, you're here to make life-changing profits. You probably don't give a shit less what the technical aspects of the staking are. Okay, but just a quick review here, guys. There's two systems or two methodologies in the cryptocurrency world to validate a transaction. The first one that was invented was called proof of work. That was done by Bitcoin. And that's called mining, okay? And then later on, I think it was in 2012, I think it was Pure Coin or one of those coins. They were one of the first early ones to come out with what's called proof of stake, okay? So in both systems, whether it's proof of work over here, right? Sometimes you'll see it as proof of work, POW, or proof of stake, which is POS, right? In either one of these systems, you want the people that are validating the transactions, they want to show that they're not trying to game the system or try to trick the system. So in each system, regardless of which one you use, right, it requires that you consume something. It costs you something in order to validate the transaction, so that everyone else on the network knows that you're not trying to cheat, okay? So in proof of work, they call it mining, and it consumes a significantly large amount of electricity, right? I don't know how they will ever, scale that as it gets bigger and bigger, right? Because it keeps consuming more and more electricity to produce each Bitcoin, or to validate all the transactions in one block, okay? On the other hand, the proof of stake people, they figured out a different way. Instead of consuming a large amount of electricity to validate the transactions, in their system, right, they require a bunch of tokens of that, so that you have a stake in the game, okay? So if I have a lot of stake, a lot of tokens of that network, the chances of me trying to game the system and cheat the system and hurt the token value that I have is probably lower, okay? So that's why they require you to have the tokens, so that you have something at stake, okay? In English, in case English is not your primary language, having something at stake means that you have something where it hurts you if you try to cheat the system, okay? So, and that's basically what it is. And in this video, I want to focus just on this aspect, the proof of stake. The proof of work and the mining and stuff like that, you don't hear us talking a lot about it, because I used to work at an energy brokerage firm. If you guys watched my earlier videos, especially if you search for the video why I put my life savings into Bitcoin, or how I got into cryptocurrencies. One of the earlier videos, I explained how I used to work at an energy brokerage firm, and they were mining Bitcoins. And I saw how much it cost and it's not very, at this stage, it's very hard for someone to get into mining. For an individual trader or investor like myself, or like you guys that are watching this, this is reserved for like people who are very specialized in hardware, and they have access to an abundance of electricity. For example, like the guys that are mining Bitcoins in Vietnam, they're way up north where it's cold in Vietnam, and they have like political connections to where they have access to hydroelectric power, and then whenever they have extra power, they feed it off to the Bitcoin miners, and they get it at a discount rate. So there's like political ties there to how they do that. You and I are not going to be able to do that, and if you're watching this video and you can do that, more than likely you're not going to be watching this video. So that's why in this video I'm just going to focus on the staking aspect and how to make money from that, okay? So let's jump over to point number 2 here. The staking rewards, and I want to make it very clear, guys, because whenever I talk about staking, people always think that the percentages of profit that I talk about are in US dollar, or in euro, or in Vietnamese dong, or Chinese yuan, or something like that. And all the percentages that I'm going to share with you guys are strictly in the token itself, okay? It's not in fiat terms, it's in crypto token terms, okay? So let's just say, for example, based on my staking experience. And I've been staking since, I think like 2015, 2016. It's been so long now, you know. I've been staking for so long now, it's hard for me to remember how long I've been staking, okay? But it's been a while, okay? So I've noticed something here, and this is not a set rule, guys. I'm just sharing with you guys what I've learned, okay? So the coins that were born before 2017, the great bull market of 2017, I noticed that they tend to have less than a 7% ROI. And ROI stands for return on investment, okay? And the reason why is because when proof of stake first came out, they were they were being criticized because, you know, you can mint new tokens and new coins out of thin air, right? And you didn't have to consume any electricity or anything like Bitcoin did. And so the early creators of the proof of stake coins, they were afraid to have a high inflation rate, and the inflation rate is the rate in which new coins are minted each year. So the new coin, for example, like Dash, like NXT, like Ardor, like Waves, these were some of the early proof of stake coins. And for example, like NXT, Ardor, and Waves, those are somewhere like 1% or less, okay? Dash happens to be around like, I think 6 or 7%. But it declines each year also, okay? So these right here are about 1%, and Dash is the only one that I can think of off the top of my head that was prior to 2017, that was around 6 or 7%. But most of them are around 1%. And the reason why they did that is because they didn't want to spook the community, and they didn't want to look like they were trying to cheat the system or game the system or just mint tokens for themselves, okay? So that's why they had the interest rates very, very low. Now keep in mind, guys, the interest rates are in tokens only. It's not in US dollars, okay? It's not in fiat terms. Later on, when people saw the success that these coins have, especially with Dash and how much you can stake with it and how much money you can make, especially in 2017, people like the Dash, I think it requires like 10,000 tokens, and at that time it required over like $100,000 just to get one Dash masternode and staking. I had several friends that were staking that, and they were just making a ton of money from staking Dash during the bull market of 2017. So what happened was people learned from this, and in 2017 or 2018, the coins that were born then, right, usually has in that sideways S symbol right there. It's in English it's called a tilde, all right? And what it means is roughly or around or approximately, okay? It's not an exact number, but it's around 7% return. So here's an example. We got like Tezos, Pivx, Zencash, we got Decred, and we got Neo, right? Tezos, right, stakes around like about 7% a year. Pivx does around 8 to 9% a year, and then Zencash does around the same thing. And then Decred, when I first got into Decred in 2017, they were staking around like 24% a year, okay? And Neo was paying around 6 or 7% a year also, okay? Now, the problem is some of these coins, especially all these coins right now, Pivx, Zencash, Decred, and Neo, they've been declining because the rate in which new coins are produced, it declines as the years go by, okay? So right now, I used to stake Pivx and these coins right here, but I really no longer stake them. Well, Neo, it stakes automatically, so it's not like I have to do anything, okay? And then Decred, I put it up, when I started staking it was like around 24% a year. Now it's down to like, I think 8 or 9% for a year now, and it's in 2019. So in only 2 years, it decreased from 24% down to around 8 or 9%, okay? So Tezos just started staking it here in 2019, and it's around 7%. If you deduct the fees that the delegators, the bakers charge and everything, you get around like 6.25%, 6.5%, okay? Now, the coins that were born after 2018, right, I noticed that they are around 12 to 24% a year, most of them, right? For example, like Zcoin pays like around 16, 17%. Energy, when I started staking it, it was around like 70, 80, 90%, right? And then ever since Qcoin started opening up their staking program at their exchange in the end of July 2019, there was so many people were sending their coins there to get staked that it dropped the interest from around 70, 80, 90%. Now it's down to like around 32, 33%. Okay, so Horizon, right? What happened was Zencash rebranded itself, and it went from a single-digit interest into a double-digit. Now it's like around 22, 24% a year. Okay, now Icon is about to start their staking, right? And Icon is paying around like 16%, 15, 16%. I'm applying to be one of their P reps. So once I put that in, if you guys support our channel, go ahead and vote for me to be one of their candidates. I'm going to be a candidate for them. If you guys vote for it, then afterwards you can delegate your Icon tokens to me, and then I can stake it for you. And then Cosmos, it pays around 12%, but now there's a lot of people staking it, and now it's down to like, so at the beginning of 2019, it was around 12% a year, and now it's down to like, I think like 9 or 10%, okay? So that's the rates, the interest rates that you can expect for these coins to pay out if you choose to volunteer your computer and stake them, okay? Now, part 3 here, I want to talk about the different levels of staking, okay? So let me do my fancy camera work here and slide this, my awesome camera skills there. Okay, so there's 3 levels of staking profits that you guys need to be aware of whenever you guys get into staking, okay? Now this is not something that people will tell you online. I'm telling you because, you know, I'm doing it, and that's what I'm doing, using to pay for my living expenses each month. And I've been doing it for a while, so I'm gonna share with you guys here the 3 levels of staking. I'm gonna start at the bottom and go up, okay? The first level of staking here is what I call the general staking. And you can buy tokens like Energy, like Pivx, like Tezos, and you can set it up very, very easily. Like I call it general staking because generally anyone that has the money to buy these tokens can usually go and stake it, all right? So I stopped staking Pivx because Energy was paying more money, and since I bought both of those coins to stake and make a monthly income, I sold all my Pivx and moved it over to Energy. I still have a lot of Tezos that I'm staking, and I have a lot of Energy that I'm staking. I'm going to be setting up a Baker, a Tezos Baker, so once I have that set up, I'll put it up on the site, and then if you guys support our channel, you can delegate your Tezos tokens to me, and I'll bake it for you, all right? Now, this is the easiest one, guys. If you guys get into staking, I would recommend that you guys get into this first, just to get started. You know, get a few tokens, any one of these coins, it doesn't matter, right? I'm not paid by any of them to recommend it or anything. They're the ones that I currently stake, or I used to stake, like for example, like Pivx. So those, anyone can have access to it. It does not require a lot of technical skills, and it does not require a lot of money, okay? So that's general staking. Now, the next level of staking is what I call masternode staking, okay? The masternode staking requires more money, okay? For example, like Dash, like Energy, like Horizon, like Zcoin, like Decred, like Tezos, XTZ is the symbol for Tezos right here, right? If you guys go to stakingrewards.com, right, and you guys sort it out, I'm looking at it right now. If you guys go to stakingrewards.com and there's a one of the column headings say staking yield, and if you click on that, it will sort this out, and it'll tell you from the highest to the lowest staking rewards and percentages. And right next to it, it'll also tell you the minimum amount of tokens you need to run a masternode. A masternode is labeled on there as MN for masternode. So for example, if you wanted to run Dash, that's going to cost you 10,000 tokens, and you multiply that by whatever the current price of the token is. So for example, if I'm running a masternode for an Energy masternode right now, that requires 10,000 tokens times $2.50, which is about the current price right now. So that's about $25,000 to run one Energy masternode, okay? And it produces about right now, today's rates, because the rates change every day, but in today's rate, it will produce about 32% annual return on the tokens. Okay, so it produces it in the number of energy tokens, not in US dollars, guys. I cannot stress that enough. Not in US dollars, but in the energy tokens itself. So if I have 10,000 tokens, multiply that by 30% would be around 3,000 tokens a year. So 32% would be around 3,200 tokens a year. Okay, so if I have a energy master node and I run it for an entire year, according to today's rate, I should get about 3,200 tokens in reward. And then you take that 3,200 tokens and multiply it by the current price on the day that you sell it. So at the end of the year, if the price of it is at $2, then it's 3,200 multiplied by $2. If it goes up to $4, multiply it by $4. If it drops down to $1, then multiply it by $1. Okay. So each one of these requires a master node. So Dash requires 10,000 Dash tokens. Energy requires 10,000 energy tokens. Horizon, I forget. I think they need like 500 or something like that. And then Zcoin needs 1,000. And then Tezos requires that you have 8,000. It used to be 10,000 when they first launched in the beginning of 2019. It was the late 2018, 2019. It was 10,000 tokens. And then sometime in the middle of 2019, they voted to drop it down to 8,000 so that more people can come in and do it. All right. Now, Decred, even though Decred is not a master node, I put Decred up here in the same level as the master node staking because the last time I checked, right, Decred requires about like 135 tokens. Okay, so let me pull out the calculator here. If you take out 135 tokens and 135 tokens and you multiply that by the current price of Decred, let's just say it's $16, right? Then that requires $2,160. Okay, so you cannot stake this without a minimum of 2,160 US dollars. So that's why I put it up there. Down here, you don't need any of these, right? So even though I put this down here, you can stake the energy tokens by itself. So if you have like 100 tokens, you can stake it by itself. You can stake 1,000 tokens by itself, or you can aggregate and put together 10,000 tokens and run an energy master node. Same thing goes here, same thing goes here. So these tokens right here allows you to stake it, you know, with a small amount, to any number of tokens, or you have a set number of tokens that system requires, and then you can run a master node. Okay, so that's why I put Decred here. So even though in theory Decred says that you can stake however many tokens you want, the reality is you still need about 135 at the moment, somewhere around 135 tokens to be able to stake it. Okay, so it's not like you can just do it with 1 or 10 or 20 the Decred tokens. Okay, so that's what I call the master node staking. Okay, now the difference between let me go ahead and explain this last one, and I'll tell you the difference between these three. Okay, so the last and the highest level of staking that I've seen and that I've witnessed is what I call the money and politics staking. Okay, now this is a high level of staking here. Okay, so the money and politics up here are something like Lisk, EOS, and Icon. Okay, so each one of these systems, they have like a what do you call that? They have like a inner circle, or in English or in America we call it the good old boys club. Good old boys mean it's the guys that are popular, the guys that are well known, and the guys that the community respects. Okay, and those are the guys that are allowed to run those types of master nodes. Okay, so I had a friend who was running a Lisk master node, and he bought the Lisk during the ICO. Okay, we bought the Lisk during the ICO also, but we sold it before they came out with their master node program. But like in the Lisk master node program, I had a friend who was running it, and he was making like over $100,000 a month back in 2017 during the peak of the bull market. Okay, he also did that with the ARK token also. He had master nodes in that, and what happened was he got kicked out of both of those because the Chinese came in and they took over and they started voting each other, like they colluded with other Chinese master nodes, and they just voted my friend out So he was making like a 6-figure income each month from staking each one of those tokens separately. Okay, not both of them combined. Like on the ARC, he was making over 100,000 US dollars a month from it, and then on the Lisk staking, he was making over $100,000 a month from that also. Okay, now these guys up here, they only have like 100 what they call delegates or block producers. Okay, somewhere around 101, 104, 108. I don't know how the hell they come up with those numbers, because to me, mathematically, that's not a big enough number for me to believe that it's decentralized. Okay, but keep in mind, guys, this is a trading investing channel. We're not here for philosophy or technical stuff, right? So whether or not it's decentralized or not, you know, the purpose of this video is not to worry about whether it's decentralized or not. It's to look at which staking is available so that we can make money from it. Okay, so for example, like EOS, they have like 21 block producers. Okay, and they're the ones that get to produce all the new tokens. And to me, I think that's a bunch of bullshit. I have some EOS tokens, don't get me wrong, okay? I have some EOS tokens, right? And I don't believe in that garbage, you know, that 21 block producers is not enough to be decentralized, okay? That's very easy for the Chinese to collude with each other, right? And if you look at the number of Lisk delegates, okay, or block producers, most of them are Chinese. If you look at the EOS, most of them are Chinese, and with Icon, most of them are Asian or Chinese or Korean, okay? And the reason why they're able to do this, guys, is because in Asia, the financial laws are a little bit easier than in the US. So there are certain things that they can do to collude and conspire with each other to kick out the Americans or the Europeans or the Western block producers that if the Americans block producers try to do that, it would be illegal. Okay, so that's the reason why they dominate all these coins that have block producers as masternodes, right? More than likely, the Chinese are going to take over and be the ones that are doing that. Okay, so I'm working on applying to be one of the Icon block producers. Okay, hopefully you guys support us and vote us in for it, right? So at least we have some, you know, Westerner background, someone that's a block producer that has a Western background to help, okay? To just kind of spread out and make it more decentralized, all right? So Icon, Lisk, and EOS, these coins right here, the reason why I say that you need money and political clout or power to be one of their block producers is because that's the reality. You need lots of money and you need to have engineers behind it, and you also need to be able to be some type of, when I say politics, I'm saying that you need to be like a crypto influencer or someone that is recognized in the community. You have to be a business, an exchange, somebody that is known, that's well known. Okay, and that's the only reason why I'm stepping up to be an Icon block producer, because we have our channel and it's been around. It's one of the first Bitcoin and cryptocurrency trading and investing channel that I know of that got started 7 years ago. So I have confidence that we have a good shot at becoming and being voted as a block producer for Icon. In their system, it's called a P rep. Okay, so when you guys see me come out with that, make sure you guys vote on it. Okay, now on these right here, out of all these, the general staking makes the least amount of money. Okay, here you can get somewhere around like the low 2 digits. Okay, so you can get around 10, 12, 13%. So somewhere around there, somewhere around 8 to 12% on this. You can get this. Okay. Quite easily, okay? Let me go ahead and write that in right here. I'm just gonna put in like less than 12%. Now, when you run the masternode staking, right, I'm gonna put that it's less than 24%, okay? And then on the money and politics here, it's significantly more, okay? I don't know how much because I haven't done it yet, okay? I haven't been one of the block producers for any of those yet, but I can tell you that, like when my friend was producing over $100,000 a month from being one of the block producers for Lisk and for ARC, okay? I know that he did not put in $100,000 in each one of those coins, okay, and he was producing $100,000. Okay, he got in early and was able to get enough coins to be it, but then the Chinese colluded, like one block producer colluded and conspired with another one and a group of them, and they started voting out all the American block producers, and most of it was just left with Chinese block producers. Okay, and they were willing to conspire together, and that if anyone tried to remove one of them, then they would, work together to kick the people that they don't want, and only vote together to keep the people they want. And so these guys are making what in English we would call a shitload of money from staking those. Okay, so if you're new to cryptocurrency staking for money, I would just focus on the general staking and the masternode staking. I wouldn't even worry about the money and the political staking there, because that does require a lot of money, and it requires a lot of crypto influence for you to do that. Okay, so if you're a channel like us, or you people know you, thousands of people know you, then I would consider doing something like that. And then you also have to have money to hire engineers to run one of those block producing nodes also. Okay, so that's not something that I would recommend. If you're watching this video, you are not one of the people that should be doing that. You should start down here and then get a little confidence first, and then move your way up to about right here, and it's more than plenty. Okay, so over here, even though I say less than 24%, I'm just saying an average, because like right now I'm staking energy and it's way more than the 24%. Matter of fact, when I started staking it was like around 80 to 90%. Okay, just about 5-6 months ago when I started staking it. Okay, so hope that answers the different levels of staking. And this is something that I didn't know when I first started staking, and this is not something that people talk about online. So I'm just sharing with you guys what we do in reality. None of this is theory. Okay, so number 3, let's jump over here and talk about number 4. Okay, I want to talk about the risk, okay, in staking. All right, because it all sounds good and dandy, but let's talk about the risk that's involved. Okay, let me see here. Now, the risk that's involved, okay, is that the number one risk is that the price drops. Okay, when you are staking this, I told you that the returns are in tokens only. So if I'm staking PIVX, it's paying me, and the system is paying me in PIVX tokens. If I'm staking Tezos, it's paying me in Tezos tokens. Likewise, if I'm staking Decred, it's paying me in Decred tokens. So the risk that you have is that the number of tokens that you receive each month or each year is fairly consistent. Okay, because it's in tokens. So the network is able to keep that fairly consistent. However, the dollar amount, the value of each token, goes up and down each day, each week, each month. So you don't know. So for example, when I bought the energy tokens, I bought it at an average of like under $2. But in the first or the second month that I staked it, it went up to $8. Okay, so instead of having an 80% return on my money, or whatever the amount was, it was actually like 4 times the amount. So I got, the market gave me an opportunity. So I sold and took profits there, and was able to break even within like the first 3 months of staking energy, because each month the price of that token was more than $2. So in 3 months, I was able to recoup all my initial investment. So now anything I stake in the energy token is just pure profits for me each month, regardless of what the token price is. Now, obviously, I want the token price to go up so I can get more profits from it. But let's just say that whatever I get now, it's basically, I don't even know how to calculate the ROI on it, because whatever I make is pure profits. Okay, now let's just say that the price goes down. Well, then that's the biggest risk. Okay, because it was nice to stake it while it was at $6, $7, $8, $9, but then as it dropped down to where it's at today, which is around $2.50, and obviously it sucks. It's still 50 cents above what I bought it for, but it sucks that the price drops. Now, I was able to break even with the energy token within like a little bit over 3 months. But if I didn't break even, right, then it sucks, because now the price is below what I bought it for. Okay, so that's the biggest risk right there. Okay, now the second risk is the computer security that's associated with staking, because what happens is when you guys follow us. You guys hear me say all the time, do not keep your coins on the exchange. Do not keep it on a computer. Keep your coins in a hardware wallet. Okay. So the risk here is that some of these coins, when you stake them, for example, like the Decred that I'm staking, or the energy that I'm staking, it has to be kept on a computer. It cannot be on a hardware wallet. Okay. Now some of them, they allow you to stake on a hardware wallet. For example, like the Particle token, or Tezos, or what else? Cosmos, right? Those all allow you to do what's called cold staking, which means that you can put it in a hardware wallet such as a ledger, and then you can delegate those coins to a baking service or a staking service, and the staking service will stake it for you, and they take like a 10 to 20% of the rewards, which is not bad, because now you can let someone else stake it for you, and then you just keep your coins on your hardware wallet, and the only person that can transfer those coins is yourself. So it's much more secure. Okay. So once we have the staking service set up for Icon, Cosmos, and Tezos, you guys are welcome to keep your coins in your hardware wallet and then delegate it to us, and then we'll stake it for you, and then we'll charge a small fee for it. Okay. And we'll put those instructions up once we get the service up and running. Okay. So that's the two risks. But if you are able to stake it and keep it on a hardware wallet. So for example, right, if you have, let's say you're only staking a small percentage of your portfolio, then you can take the risk of staking it into something like Energy or Pivx or something that does not have hardware wallet support. But if you're staking a large chunk of your portfolio in a staking, you're putting it into a staking coin, I highly recommend that you consider putting it into something like Cosmos or into Tezos, because those allow hardware wallet support and you can do cold staking from them. Okay, so and that will reduce your risk, because I would not, like stake hundreds or millions of dollars like that. I would do it on from a hardware wallet, and that's the reason why, even though I get paid more in Energy, I actually have more money in Tezos and Cosmos than I do in Energy, even though Energy pays more, because I cannot afford to put a large portion of my portfolio into Energy because they don't have a hardware wallet support yet. Once they do, I might consider it, because it does pay a higher interest rate than Tezos or Cosmos. Tezos right now only pays like close to 7%, and Cosmos pays like close to 10%. All right, so let's come back over here. Let me move my fancy camera setup right here. Let me see. Okay. All right. So, why staking is the future? And I want to wrap up this video, guys. I believe that staking is the future because it allows the trader or the investor to get two benefits that people have always wanted. Okay. One is that people like to have a monthly interest. Okay. The second is that they want a price increase. So there's a lot of people right now that are invested into bonds. They're invested into like real estate. They're invested into like stock paying, dividend paying stocks that pay out like a 5-6% dividend each month. And then what happens though is that if you put your money into, like, let's say a bond, okay, a government bond, you get like 1%, or it's extremely low right now. But even when it was high, when you can get like 4 or 5% for your bonds, right? You did not benefit when the market did well and the price goes up. So all you did was got that monthly income, but you don't benefit when the price goes up. So with staking, you get the benefit of both, right? You get a monthly interest payment, right? And then if the price of that token ever goes up, like it did for me with Energy, when I bought Energy below $2, right? I was getting monthly income from that. And then when it went up to $8, I also benefit from the price increase, okay? So that right there is where the beauty of crypto staking comes in. And I believe that this is the future. I'll make a separate video that goes into more detail about why I believe the staking is the future. But right now, crypto staking combines the benefits of a monthly interest payment and the benefit of a potential price increase, and together I believe that's the reason why it's going to go up big in the future, and it's going to continue to get more and more popular. It's not going to go away. Staking, in my opinion, is the future, and that's the direction that crypto is going towards, and that's the direction that I am preparing my portfolio for. So I wanted to share this with you guys. As always, guys, right? These results are not typical. So when I tell you guys that I was able to recoup my money, you know, in a little bit over 3 months with energy, right? These results are not typical, and I gotta let you know, guys, there's no guarantee you will get the same results doing the same thing I do. Okay, there's no guarantee because the market conditions change, so there's no way I can tell what it is. So do not take these numbers that I said and think that that's the gospel. Okay, in English, that when you say that, take it as the gospel, that means the word of the Bible, okay, or the word of God or something like that. Okay, go out there, do your research, right? But I hope that this video helps you guys, help you understand it better when you guys are doing the research on the crypto staking. If you guys like this kind of information that I'm sharing with you guys, right, and you're managing a 7, 8, or 9-figure portfolio, I highly recommend that you guys go to www.cryptocurrency.market /blueprint and get you a copy of our cryptocurrency investing blueprint. In that course, I believe that's the ultimate and the best cryptocurrency investing, trading course on the planet. If you guys know a better one, let me know. I'd like to check it out. But in my opinion, that's the best course right now for anyone that wants to learn how to manage a 7, 8, or 9-figure portfolio. All right, and we talk a lot about staking in there and how we do it. Right. Thanks for watching this video. Make sure you follow me on Twitter at HeyTaiZen, and then be sure to get you a copy of the cryptocurrency investing blueprint and be prepared for the upcoming bull market. All right. Thanks, guys, and I'll see you guys in a future video.